another episode of Warrior to Superhero. Let's go and correct our slides for you. Right there. Come on, there we go. The data technology. Today is a special occasion in Warrior to Superhero. Just like technical glitches, we have amazing things that we go over and do. Every few months, we have a fifth week in the month. It's a fifth week in the month. Did you know that we had 5 weeks in a month? So I want to welcome you again to the SuperheroSanctum. This is when we bring in a special guest called Influence to depart superhero tactics to our beloved audience for your growth. And our special guest is Stephanie Corcoran. She specializes in military and veterans, helping them out in the next steps of buying a home, because most of us want to buy a home. Isn't that the American dream, right? So she serves us in Washington and California market to empower you guys to use one of the most powerful benefits have. So I want to welcome her to the stage and bring her in.
Thank you for joining us, Stephanie. Do you hear us?
I can hear you. Yeah, just barely, but I can hear you.
Awesome. So we'll just try to be super loud so you can super hear us. So our first question that we want to go over and ask you is the most important thing, at least for our members, because they probably don't understand this when they get on the services. What is actually a VA home loan and what does it do?
So the VA home loan is designed for those who are either active duty, who have served at least 90 days of active duty service, or at least a certain amount of hours if they've only been reserves or National Guard. So that usually hits about 6 years on that. So once you've done active duty service, you've now qualified for your VA home loan benefits. Of course, that is, the benefits that you use to be able to buy a home. Those benefits never go away. And those benefits will always be for that veteran as long as they live.
Wow. So pretty much you just do 90 days. That's it. So go to tech school or go to some type of training and boom, you're like, have that benefit. Awesome.
Exactly.
So we go to the banks and we go to these places and whatnot, and there's so many people advertising these VA home loans, but what if I want to look at something different between like a conventional loan or an FHA? Is there any benefit to even touch those, or should I just use my VA home loan?
So it just depends. It depends on, if you have a big, huge chunk of money that you're going to be wanting to put down, a conventional loan may be the best benefit for you. But if you're looking to, especially a lot of, first-time home buyers, young soldiers, things like that. So the VA home loan has no down payment. So there's no down payment. There's no mortgage insurance. You're not coming up with, 3.5% down. You're not coming up with 20% down. Interest rates are considerably amount lower, usually with the VA loan. Also, you have the option of doing what's called a VA streamline to be able to reduce your interest rate without an appraisal, without income verification, just to be able to reduce the rate, not change the loan, but just reduce the rate. And that's a lot of people don't understand that they can do that.
No, most of us just come in, they want to get our loans as quickly as possible, get in our house as much as possible, and we might find out that we're paying way more in interest than we initially thought.
Not only that, but a lot of fees. So those are the questions that people should be asking when they're looking to go buy a home is, what are your fees? How much are you paying to get a particular interest rate? A lot of times, if it sounds too good to be true, a lot of times you're going to pay for it. I have a lot of people right now, with everything in the news with interest rates super low and everybody's thinking that they're going to get 0% interest. It doesn't really work that way. But, if you go to a lender and they're telling you 3%, and then you go to another lender and they're like 1.5%, you need to ask the questions of how much are they charging you to get that particular rate, and if they have lender fees. There's a particular lenders that charge 1% of your loan. Here in Washington, housing is pretty expensive. If you're buying a $500,000 house, and you have a funding fee and you're paying the lender fees, you're now, it could be over $20,000 added to your loan.
Wow. And they're just rolling that into the loan, correct?
Yeah, so a lot of that stuff gets added into the loan. And so when you're a couple of days into closing on your loan, you get your closing disclosure, and all of a sudden you have lender fees, you have buy down rates, you have all of this stuff. So you want to definitely be asking the questions and working with the lender who's going to be upfront and tell you, about those fees and how much they charge just to walk in the door, and and get an itemization of what they actually charge, and not one of the ones that have a little disclosure that's microscopic that say that these rates could change any moment or things could be added. You need to be working with somebody who's going to be upfront with what they're charging you.
That's huge, because a lot of times those leases can get very, very long. And when you get into mortgage and that type of stuff, and it's like you just keep signing. And the next thing you know, it's like, I thought I was only going to pay $1,200 to $1,500 a month for a $250,000 home. And then you're like, I'm paying $2,000 a month. And you're like, why am I doing that? And you're like, oh, this fee, that
Exactly.
fee, this fee.
Yeah, it could add up really fast between, if you don't have a disability rating, anything 10% or below, anything 9% or below, you have a funding fee. It's 2.3% the first time you use it, and over 3.5% the second time you use it. So, if you're buying an expensive house, that all gets added in there, and that increases your monthly payment. It could really throw you into despair if you have BAH that isn't that much.
Mm-hmm. And that'd be huge, because the average BAH when I lived in Washington was like, $900 to $2,000 depending on your rank. And you're like, you try to leverage that BAH to go over and to pay that mortgage. And then you're like, oh, now I'm forking out cash.
Yeah, exactly. And so a lot of those fees aren't in there until like 3 days before you're closing, or even a day before you're closing if you're buying a home. And so are you going to walk away from it, or are you just going to sign the paperwork so you can move your family? So it's, you got to really ask the questions and get away from those tactics to be able to save money.
Yeah, that's definitely key. So what about as I'm transitioning to different types of veterans, I think of more of the fixed income veterans, like, hey, they're older or they're on VA disability and whatnot. Would they be able to qualify in that particular regard as a VA home loan?
Yeah, it just all depends on the price of the home. It's just like anything, if you don't make very much money, you're not going to go buy a Porsche. It's kind of the same thing. You got, a lot of people look at these $500,000, $600,000 houses, but you're getting $1,800 a month in VA disability. So it's, you got to, the lender has to look at your debt to income ratios and make sure that you actually can qualify for it. But those types of incomes are great because they're not taxed. So you're not, we're not having to take tax or anything out of that. And it's guaranteed. So I have clients that are on, VA disability or just Social Security that are able to buy homes. It's just all depends on what you're looking for and what price range. But and then for older people who may have already bought a home and it's paid off and they're looking to buy something else, or rates are super high and they've never refinanced, all of those things come into a home. A lot of scenarios, but for sure, anybody on a fixed income can definitely qualify also.
Well, that's a good thing, because I found out that briefly when I lived in Washington. I didn't even realize that my disability qualified me. They're like, oh, you can get $80,000 based on your disability. They have to look at all the income, but I was like, I never knew that my disability was considered a quote unquote guaranteed income. So
Yep, guaranteed income is the best income, but a lot of people need to realize that if they're ready to transition out and your ETS date is within 12 months, the qualifications change to be able to buy a home. And so a lot of people are like, well, I'm going to get BAH, I'm getting my GI Bill money. It doesn't count. The VA does not look at that as guaranteed income. And so a lot of people are waiting until they ETS and they're not able to buy a home because they're now going to school and things like that.
Interesting, interesting. Yeah, I ran into that briefly when I was looking at it. So now I'm thinking from a different perspective of like the younger veteran, they get out of the service and they become a vetpreneur and they become an entrepreneur and they start out as a 1099 and they're making good money, 50, 100, 150, $250,000. But if they're 1099, would they go over and qualify?
Has to be for 2 years. So if you're a 1099, you own your own business, you have to have that business for at least 2 years. The reason behind that is because, 1 year you could be very successful and have a great business. And I mean, look at the COVID stuff that hit, people's business just tanked, unfortunately. So we have to make sure that we get an average of income on people who are business owners to make sure that they qualify for what it is that they want. I don't want, somebody who's a business owner walking into a home and they can't afford it. They're now house poor. That's not what I'm looking to do. So we want to make sure that they definitely qualify and the business is making money and not losing money.
So the best type of veteran for you is usually 18 to 24 months out, or if they're staying in, or if they at least have their entrepreneurial business for over 2 years then.
Exactly. Yeah. So if your ETS date is within 12 months, then you need to have a job that is set up prior to getting out of the service in order to purchase that home, unless you're going to be, re-enlisting and getting your statement of service saying that you're eligible to re-enlist. Or if you're already out and you've already got your business established, it needs to be established for at least 2 years.
Yeah, that's huge to go over and understand. So basically you could be a baller in your business, but since you don't have the credibility of that, you could technically be like, hey, I could go over and pay this cash, but I'm trying to keep my business afloat. And you're like, oh, I can't buy a house. I guess I'm renting.
Exactly. Yeah. But I mean, again, if they have their disability and, different incomes coming in, we can also use that, to offset the difference of that 2 years for the business also.
Okay. So let's do one more question I didn't write down, but I'm just thinking about a COVID question specifically. So COVID goes over and hits, and we have a lot of people on these moratoriums and things of that nature. Does the veteran loan, like let's say they already have it, is there any protections for that? Because I heard, and I don't know if this officially, when I used to foreclose homes, it was 3 to 4 months of mortgage missed, put the foreclosure notice, boom, set and done. And then about a month later, I did the auction. When it came to a veteran home, I heard from other lenders, they said they don't like VA loans when they were working at banks in the sense because they can miss payments. A lot of them, they set up to 60 payments. So is that a truism that I heard, or is that a falsism? I mean, is there a bigger protection in that regard for the people that are watching that might have been, getting behind because of COVID?
Well, a lot, it's by the mortgage company. It's not by VA, because VA isn't the lender. The VA is more of the insurance company if the veteran defaults on the loan. Mm-hmm. So all of those are per lender. Every lender has their own set of rules, has their own deferments, has all of that. So it could range from 3 months for one to 6 months for another one, just depending on what exactly, what bank they're with, that their investment, their mortgage is with. So it could be all over the board.
So in that sense, the veteran doesn't have an exception protection of having a longer stint of potential foreclosure. They could be within the same rules as a conventional or an FHA then. Based on the bank.
Correct. Yeah, because it would go through, there's exceptions with different things and different, things like that. So every lender, so if anybody is in that situation, they need to reach out to their particular lender, not the VA. A lot of people are calling the VA because they have a VA loan, but the VA doesn't have anything to do with it because they're not the ones who are lending the money. So each individual needs to go to their own particular lender and find out and ask what their particular backing of that particular loan is, because just because it's a VA loan, it's still a government-backed loan, just like FHA. So there's different rules that pertain to a lot of that, but again, it's going to be per lender.
And that's huge to understand, because we think, all right, VA has us, VA has us, VA has us, but VA just opens up the opportunity But in the end, it's the overall bank and mortgager to go over and to define those rules then.
Yeah, so the VA is the one who sets guidelines. So we have VA guidelines that we go by. The VA says there's no minimum credit score, there's no minimum debt to income ratio. But as the lenders have to set guidelines, because you can't have somebody comes in with a 300 credit score and get a $500,000 loan. There has to be some sort of rule set in place to protect the lender and also to protect the buyers. Because if they don't qualify for the loan, we're going to have another 2008 on our hands where everybody's going to be in foreclosure. So the VA is just the guideline makers, and they're the insurance company. If the veteran, defaults on the loan, that just means that the lender is going to get paid.
Wow. So in a sense, for the lender, it's like it's a benefit on both sides. It's like you take it in, you define your and if the veteran gets in the worst case scenario, you guys are still getting paid. So it kind of protects us and protects you at the same time.
Exactly. It's a great benefit.
Mm-hmm. So what about like most veterans? You talk to a lot of veterans on a day-to-day basis. You're covering 2 states and everything else. You're constantly on the phone. My ear would be tired if I was on the phone that much. I've done call centers. That's enough for me. So what do most vets don't know about the VA home loan?
I think the questions that I get asked the most is, can I use my VA loan more than once? And the answer is yes. Can you have multiple VA loans at one time? Yes. Yes, you can. Can I build a house like on property? Yes and no. So there's different ways that works, and that's just by each scenario. We kind of go one by one on those particular things. If you're buying in a subdivision, that's great. If you're buying land and wanting to, build a log home or something, then there's restrictions of different things like that. Mm-hmm. The other thing is the streamline that I talked about before, that if you're in a really high, interest rate, with rates being low right now, the VA says that if your rate drops 0.5% or more and you've had your loan for at least 210 days, you can reduce your interest rate. So there's no appraisals needed. There's no income verifications needed, anything like that. Now we're not talking about taking money out or taking an ex-wife off the loan or ex-husband or anything like that. It's merely to change and drop the interest rate. And you can actually do that every 210 days. So wow. If you're at like 3.5% or 4% right now, we need to look at that to see what rate we can get you at. And you actually can skip 2 house payments. So you'll be able to skip, like right now I have clients who are skipping August and September, and we start a new escrow account for you. So you actually get a refund back of the current escrow account that you've been paying in.
Wow.
So you can either choose to add that to the principal, back onto the principal of the loan when you get it, mm-hmm. or you got some Christmas money. So it's entirely up to you.
So what do you mean by skip 2 months? Like, so if I qualify for this, it's 0.5%, we do all this stuff, all the paperwork, you're basically saying that I can skip, let's say, November and December, and then I'm potentially getting money. Am I understanding that correctly?
Correct. Yep.
Wow.
So not only will it drop your interest rate, but you're going to skip, you have the option of skipping 2 payments, mm-hmm. and you'll get your escrow check back, because we'll start you a new escrow account with the company that I'm with if I did your loan. So then you would get 30 days after you've closed, you now get an escrow check back.
Woo. So that's pretty sweet, especially in this season. It's like, hey, because the moratoriums are closing and different things and whatnot, if it's worthwhile, then you can switch over. That would be key, because then you can take that money and either get caught up or get paused and, leverage that. That'd be awesome.
Yeah, it's one of the VA loan it has so many great benefits. And if, you're in a loan, if you qualify for your VA loan and you're in an FHA loan and you're paying mortgage insurance, you definitely need to talk to a VA lender and get out of that, because if you can have a reduced rate, you're not paying all those crazy fees. It's one of the best loans that is out there.
Wow. Yeah, again, those are the things I didn't understand. I've read a lot about veteran stuff, but yeah, I wouldn't have known that at all. And hopefully our audience goes over and takes this information, utilizes that. I mean, man, I've been almost homeless 3 times. If I could have had 2 months of free rent, whoo, because I've had gaps of work, and I'm like, hey, if I had an opportunity to say, hey, I could pause, refinance, and take that $3,000+ I was paying in rent, man, that could have like stretched me, and then I wouldn't have had to touch resources. That's fantastic.
Oh, yeah. Well, not only that, if you're like in a 4.5% interest loan, you know, and you're able to refinance it and get 3%, you know, or you know, 2.5%, that's hundreds of dollars a month. You know, I have some clients that it's $300 to $400 a month. That's huge. I mean, that's groceries, that's your car payment, that's school supplies, diapers. That's huge.
No, that's huge. That's huge. So definitely. So my last question for you before we get into the superhero tactics is, how did you get in this line of work? I mean, I met you through like some Washington networks, and you serve a lot of veterans and whatnot, but what got you specifically? Because you could have just did FHA, you could have just did conventional, you could have just served the civilian population. Why did you specifically want to serve our community?
Well, veterans are close to my heart. So my grandfather was a 35-year Air Force veteran in California. I grew up on Castle Air Force Base and outside of Atwater, California, Merced. My dad was drafted into Vietnam. So he was a Vietnam vet. I have 2 sons that are in the military. I have one that was in the Army. That's why I came to Washington. He's out now. He got hurt pretty bad. So he's out, on disability with VA disability. I have another one who's currently in the Navy, who's stationed in Guam. And then also been a military spouse for a long time. I've been through the ringer. I have my current home on a VA loan right now. I speak the language. I've been there. I've been in everybody's shoes as far as, the PCSing and having stuff picked up and delivered and going to a city that you've never been before and don't know people. That's a huge one. Being a military spouse, you're now in a new community with people you have no idea. You don't know where you're at. And now you're trying to buy a home that you don't even know if you're going to get shot in that neighborhood. You just don't know. So I've kind of dedicated myself to my clients and I've been in their shoes. And I knew how it was when I came to Washington and how hard it was, to meet new people. And the opportunity came to me with the mortgage company that I work for. We also have a veteran nonprofit that is close to my heart that Fairway has, that really spoke to me, that we help local veterans get service dogs. We try to do 1 a month. So every VA loan that I do and the company does, that money goes profit. It's either, fix their houses up or get dogs or to help with bills. So it speaks to me. And every day, if I can help veterans save money and veteran families be able to come here and have a friend to be able to kind of guide them, I love it. I absolutely love my job.
That's really awesome. Yeah, I didn't know the depth of military experience. You could just put on my rank right now. You have enough, all these connections and everything else. I should just go over and hand you my stripe. Wow, did not know that. So last, for our audience, we always ask this for every person, no matter if they're on our War Hero to Superhero episode or on their Superhero Sanctum, is 3 superhero tactics that you could give our audience for them to apply into their lives right now. It either can be attached to the VA, or it can be just things that you went over and learned as a mil spouse and as a mom, and wherever part of life that you learned, what would you want to give them so they can just apply immediately so they can go over and thrive?
I think ask questions. That's the biggest thing, is no matter what you're doing, just don't jump into something. Ask questions. Find the right people in your network, because networking is huge. It's how you get to know people. It's how you get to trust people. If you being with the military community, ask other spouses, ask other people who they used. Don't just settle for the first one. Go and ask questions. If you don't know the questions to ask, then you come to somebody like me who I can guide you. And then the other thing is stop stressing out. That's the biggest thing is especially in my line of business, your real estate agent and your lender need to take the stress off of you. It's already hard enough being somewhere that you don't know, trying to buy a house. It's the biggest purchase you're ever going to make in your life. Yeah. And you have to have your tribe. I call my team my tribe. And if you don't have your tribe on your side, it's going to be super stressful. And I think that's the biggest takeaway is work with people who you feel comfortable with and who are going to benefit you and not try to take advantage of you. Because a lot of times when they hear military, they hear dollar signs and other things like that. And you need to be working with people who are there for you, not to just pad their pockets.
Yeah, that's definitely key because we're not the ballers like in the United States either. That's the funniest part. The average soldier is making 25 to 85,000, depending on what their rank is. Yeah, a little higher, a little lower.
Right.
But the thing is that, we're trading that to go over and trade our lives for the country. So it's like, yes, you can go over and bless veterans, and yes, they have consistent income. But at the same time, it's just like, yeah, that's key to go over and say, hey, I just don't want you just to get my benefit just because you're getting a benefit,
Right. Well, and know your benefits. That's the biggest thing is if you're in the service right now, know your benefits, not just your VA home loan benefits, your medical benefits, your retirement benefits, your death benefits. I lost my dad last year. He was a Vietnam vet and I didn't know what to do. I had to learn the hard way to try to figure things out. Know that stuff, and if you don't know somebody who does, you got your VFW, you got VSOs, there's a lot of people out there to help, but definitely don't wait until the last minute to know what your benefits are, because it could really be very stressful on your family and stressful on yourself if you're trying to do things and you just don't know how they work.
Yeah, just doing like a yearly checkup on your benefits and knowing like, hey, like for veteran benefits, one of the things I figured out for the VA benefits, you can go over and pay an insurance for them to keep that benefit rolling afterwards. It's the same thing for your retirement. Yeah, you lose a couple $100 on each of the sides, especially if you have multiple benefits like I do. But the thing is that you can empower your spouse and your kids to go over and thrive. Because literally, if you don't do that type of insurance, they go out and you get your death benefit, whatever it is, and then they're having to scramble, to go figure things out.
I ended up having to pay for all of my dad's stuff. He didn't have any of the stuff that was in the right order of when he passed last year, and he actually passed away in the VA hospital, and I ended up footing the bill for everything. So wow. I was really surprised about all of that and really found out a lot of information I didn't know, with the death benefits. I just figured, oh, hey, they're going to pay it or pays whatever, but they didn't pay anything. They basically said, you need everything up front, and, you're already, distraught enough with everything going on. And then now you're forking out all this money. So it's with any benefits, any military benefits, it be your TSP or your life, anything, just understand how they work.
Yeah, that's definitely key. So that's awesome wisdom to go over and share. So if anybody wants to connect with Stephanie, her website is right below, starsandstripeshomeloan.com. That's been streaming on the banner the entire time. So if you're wondering what that ticker was, you can connect with Stephanie. So I want to thank you for going over and joining. I want to thank for the audience for going over and watching. And audience, I have a challenge for you. So our Superhero Sanctum only happens once every couple months. And the same thing happens on our TV network. We have a TV show called War Hero to Superhero. Same like the podcast, but elevated content and contextualized to you to go over there. So if you want to elevate Stephanie to the next level, you could watch all 29 minutes and 26 seconds. And we want you to. We want you to gain that wisdom. But if you can't, hey, 3 seconds gives her a view. She gets the most view in 72 hours. She gets uplifted to the TV show so that we can get this information out to the masses. So go over. And again, we always love for you to go glean off all the wisdom, no matter if you're watching this on the Easy Way wall, Podopolo, where you gamify your podcast, Facebook or YouTube. But if you can't go over and give the full 30 minutes, go over and take it in chunks, and a 3-second view goes over and elevates her. So Stephanie, I want to thank you for joining. Do you have any parting words before we sign out?
I just, really appreciate you having me on. And, my goal is to make sure everybody knows how their benefits work. And if anybody has any questions, feel free to log on to the website and shoot me an email or a text. And I'd be more than happy to answer whatever questions that people have.
Awesome. That is awesome. And definitely connect with her. So we want to thank you guys out, and we will catch you tomorrow back in the Superhero Sanctum. Thank you for joining.